If you think you're making a lot of money each month based on your income statement, but you don't see it in your bank account, then this is the video for you. So we got an email from Kevin, and his bookkeeper sent over the P&L last week, and it shows $112,000 net income year to date, but he only has $47,000 in the bank, and he owes $68,000. Classic situation. So what he thinks he's making is $112,000, but he only has $47,000 in cash. This is a classic problem. That's $67,000 he's missing. Where did that go? Well, we're going to try and help him figure that out. But first, we need to identify this problem specifically. Now, his bank account says $47,000 and he owes $68,000, meaning he has a deficit of $21K. Now, ways you could get this paid off is changing the credit terms, asking for extensions, and if they're not so nice, you could always just pay by credit card and pay that off, which sucks, but it might be his only option. Now, to figure out where exactly his cash is going, we can pull up a work in progress snapshot of his actual current jobs. So as we can see here, we got 3 jobs, 65% done, 40% done, and 80% done. And anybody who runs a construction business can easily put this together to help you find where your cash is leaking. So he's billing 195, 155, and 168, a total of $518,000. That's the amount of invoices he sent to the clients, and he's actually earned, meaning he's delivered services to the client, as in he's built this much of the house, 273,000, 124, and 224. This is a huge gap. He's owed $56,000 and $78,000 that he hasn't collected yet, simply because he's underbilling the client. Now, if he was on top of this, he would have known, hey, I got to increase my billings. Now, this one's fine that he's overbilled. It just kind of sucks for him because he owes the client $31,000 of services. But in the end, he's overall $103,000 negative. This is money he should have had that could have gone to paying off his subs. Now, to demonstrate this even further and drive this point home, he earned $621,000, but he only invoiced and collected $518,000, which means he's out $103,000 at the end of the day. And those are made up of the 2 jobs made up above, and the last one is fine, but it doesn't really close this gap. Now, if you're a business owner and you want to build something like this, send me an email in the description below. We'd love to work with you and help you get better financials, which ultimately leads to better financial results. Or at least you can navigate the storm better. Now, if you don't have something like this leads to something called a reporting gap, which essentially means you don't have all the information and you're making bad decisions. That's what good financials allow you to do, make great decisions. Your profit and loss says you made $890,000, but you spent $778,000, which means you earned $112,000 at the end of the year, and that should be in your bank account, but it's not. And the reporting gap lies in your balance sheet because you have accounts receivables, which means you billed them, but you didn't collect the cash. And you have the unbilled work, which we saw earlier. This right here means he should have had $300,000 more than he actually has now. And because of this, he could have had this money to pay his subs off at the end of the week instead of using a credit card to finance this. So if that isn't a call to action to clean up your books, I don't know what is. And this is how we can fix this. It's pretty easy. Every Friday, you take 20 minutes and you send an invoice to the client where you completed the most work that week. So you're staying on top of billing your client rather than building this huge amount that they owe you, which is cash that you do not have. This money you could be investing somewhere else to make yourself even more money. Next, build yourself a work in progress schedule, meaning one spreadsheet where you have a job, the percentage done, how much you billed, how much you've earned, and the gap between that. And you could just update this every single month so you stay on top of it. And finally, you track this either weekly or monthly. It's your cash available formula. And to put this all together, you just take what you have in the bank, your collectible AR, meaning what you're collecting this week or very, very soon, not something in the future. And then you subtract your payables due this week, meaning your bills. And this gets you your real cash that you'll have in your bank account at the end of the week. And looking at Kevin's, he has negative $21,000. He could have been sitting at $270,000 if he was working with us. And I know you want to be there too. So shoot me an email located in the description below. Otherwise, follow for more practical advice.